Hello everybody, welcome back. Hope you enjoyed your lunch. And now we're going to look at the growing demand and shrinking supply. Are gold and silver shortages looming? Please welcome to the stage our panelists. Chirag Sheth, Principal Consultant, Metals Focus. Elaine Baron, General Manager, NGSA. Joshua Rothbart, Managing Partner, J. Rothbart & Co. Mohammed Ayub, General Manager, SAM Precious Metals, and Scott Willig, Global Head of Precious Metals Trading at JP Morgan Chase. And our moderator for today's session is John Reed, Senior Market Strategist, Europe and Asia at the World Gold Council. Please welcome this panel to the stage.
Well, thank you very much for joining us after lunch, and hopefully we won't all go into a food coma after having been treated to such wonderful food. As you heard, my name's John Reed. I'm Senior Market Strategist at the World Gold Council, and for a change, you actually won't be hearing very many of my views because I actually get the opportunity to ask the questions. But I'm sure we'll have an interesting debate. Before we kick off, I'm going to ask each panelist in turn to give a short introduction of what they do, what their area of expertise is, and I'll start off with you, Chirag.
Yeah, thanks, John. So my name is Chirag Sheth. I head South and East Asia for Metals Focus. We are a global precious metals and research consultancy based out of London, having offices in more than 8 countries.
Excellent, thank you. Alain?
Hello, I'm Alain Baron. I'm the founder of NGSA Switzerland. We're a coin company specialized in both numismatic and bullion coins based in Geneva, Switzerland.
Good afternoon, I'm Joshua Rothbart. I'm the managing partner of J. Rothbart & Company, and we are a boutique physical precious metals company based out of Hong Kong and Singapore. And we help high net worth individuals trade and store precious metals globally.
Good afternoon, everyone. My name is Mohammed Ayub. I am the General Manager of SAM Precious Metals, one of the leading refineries for precious metals in UAE and the Middle East.
Hello, everyone. I'm Scott Willig. I run trading at JP Morgan for all of precious metals. I'm based in New York, but we're a global business based in New York, London, and Singapore. And my one compliance thing I have to say is all views after this are my own and not those of JP Morgan.
Well, that's great because you can tell us what you really think then. No, joking aside. The title of this panel, when I saw it, actually made my eyes go up a little bit. Growing demand, yes, I think we can all admit that demand for gold has been growing and in fact hit an all-time high for any third quarter, according to the data that we got from Metals Focus. So that bit I think we can agree with. Shrinking supply, well, that's perhaps an area that I would have slight arguments with, and we might come back to that. But can I just ask the panel first to just their views on the title, Growing Demand, Shrinking Supply, are gold and silver shortages looming? Chirag.
I think probably if I'll take the easier one, look at the silver market. There are already market has been in the deficit, given the fact that, what we are seeing is new usages of silver, especially from photovoltaic, EVs, batteries, storage technology. I think all those places we are seeing increasing amount of usage of silver, and most probably in some of these like, your automobiles, pharma, you have a place where despite the fact that silver prices have been going up, there is less opportunity for thrifting. So silver, I would surely say that there is a bit of shortage which is going on. I would not say shortage, but market is being deficit, and that is being funded by the above ground stock. Gold, I don't think we are yet over there where market is likely to be in a deficit. I think market will be in surplus for a couple of years, going forward. And given the fact that we are seeing such dynamic movement in the market, I don't see any sort of shortage coming in, at least in the near future, in the gold market.
Yeah, so thank you for reminding me that we're speaking about precious metals. As somebody from the World Gold Council, I tend to forget that there are other metals other than gold. Alain?
Well, in the world of coins, there's always been a shortage anyways, because in the world of bullion coins, you have the historic bullion coins that were used for the trading between governments and central banks. So they were used mainly between 1850 and 1950, and a lot of these coins have been melted down. So the international demand worldwide is fairly strong. Now, with the high gold prices, what we see as a first initial phase, which is happening now, is that the premiums are getting lower in terms of percentage. This is a very short phase that will adapt. So the demand is still there, the demand is very strong, but the premium are low, and the same apply to silver.
Well, in the world, I work at the private wealth clients, the high net worth individual. Demand is growing, and my feeling it's going to grow even more in the future substantially, because there's more understanding of why high net worth should diversify their portfolio with gold or silver for that matter. In terms of shortage, I have to say that we didn't encounter any shortage in terms of ordering, whether it's bullion bars or bullion coins, since I think COVID. During COVID, we had a big backlog of orders, mostly for silver products. The premiums were skyrocketed. Supply time was, remember, we were waiting for a US Mint or Royal Canadian Mint product to be shipped within 4 to 6 weeks to either Hong Kong or Singapore. But that was quite an extreme scenario. So my feeling, even if I look at our trading data, is yes, when the price is going up, we see more liquidation. So it's always we contain the equilibrium in the market to some extent.
Mohammed, from your perspective, obviously shortages can manifest itself in supply of feedstock to refineries. Have you seen any shortages of that in the gold and silver side?
Not really, John, but from our side of the business, talking about physical gold, we've seen a substantial increase in demand on gold. Let's talk about our side of the area here. We are seeing an increasingly demand on gold, which is definitely the uncertainties in the economics and the geopolitical issues that are going on around now. We are seeing the demand growing day on day, and we are seeing a much more increase on demand on the investment bars, for example, which is increasingly happening in the Middle East and Asian countries, mainly UAE and India and China. But yeah, to answer your question, yes, we're seeing more and more increasing in the demand of the physical gold.
And Scott, from your perspective, scarcity and shortages might turn up in the wholesale market in the way of reduced liquidity availability in gold and silver. Are you seeing any signs of that coming through?
So gold is actually relatively tight right now, but I believe there's too much existing stock for there to actually be a shortage. That doesn't mean to say that there can't continue to be a bull market. It's just that if demand keeps growing, and we are seeing growing demand on the institutional side from central banks, from institutional investors, who I think are still quite lightly allocated despite the big rally. As demand grows, I believe price will do the work to ensure that we don't actually run out. And it can be a quite sharp increase if needed. But if prices go high enough, there is plenty of supply to accommodate.
And that would be very much our view as well. We've seen record demand in the third quarter. We've also seen record supply, again, I'm talking of gold, with mine production likely to set a new all-time high in 2024. And higher prices in commodity markets tend to cure shortages of supply. So we've seen a response from the recycling of old jewelry as well, which is also going to be high. But let's turn our attention to the powerful bull market that we've seen in gold this year. I attend quite a few conferences, and certainly nobody at the London Bullion Market Association Precious Metals Conference last year was expecting gold prices to trade as high as they did. We've had 37 all-time highs for gold based on the London PM benchmark this year. And maybe I'd just ask the panelists to share their thoughts on what, from their business area, what's contributed to this, particularly from their own experiences, because I think that's where you really add value. Chirag?
I think, essentially, if you look at three big drivers for what gold has done in 2024, I would say central banks, the fact that pivot from the Fed, and you've had geopolitical concerns. While, the Fed move and the central bank demand has been much priced in, we've seen that, the momentum which central banks had, that has now somewhere slowed down. You are no longer looking at frenzied buying by central banks across the world. However, the buying has continued and it has remained at elevated level. The Fed move has also been priced in. I think the elephant in the room is geopolitics, and that is something that we've seen over the point of this couple of weeks' time. Yesterday, there was a comment from the US that led to, again, gold prices moving. So I would say we will remain into these heightened, volatile times, probably till the Trump administration takes over fully and we have got some clarity on the policy. But that's how the nature of the beast is. And we would see both gold and silver continue to trade, with heightened volatility.
What about from your perspective, Anna? How has the really strong gold price and silver price performance this year had a material impact upon the coin business that you're involved with?
Well, very interestingly, the demand, of course, is strong due to the gold, due to the high gold prices. Also, coins have a big advantage. They are always a smaller amount of money, so you buy a gold bar that is almost $100,000 a kilo now, and you can still buy a gold coin for a few $100s. And when the premiums of gold coins are not much higher than on a 1 gram bar, obviously you get the historical value of a coin that is 100 years old or so almost for free. So basically the demand for old bullion coins such as Napoleon, sovereigns, Renellis, and so on is fairly strong now. A very interesting momentum that we're looking at now is the most popular coin at the moment is the old sovereign. So is it because in the British Empire the sun never went down and the coins remain popular everywhere? But the market in old gold sovereigns is completely dry at the moment, and everybody is struggling to find Victoria, Edward, or George sovereign coins.
Yeah, I'll come back to sovereigns later, because there's an interesting development there that I'd like your opinion on. Joshua?
Well, I think you can look at the macro and say, yeah, we have lower interest rates, we have some fears of inflation, U.S. debt is the end is not in sight. But what I feel from the private client, from the family offices and everything, it's mostly what I call the fear factor, the geopolitics. We talked about it today, and we saw as we geared towards the elections, we saw the pace of transactions is getting quicker and the volumes are higher. Because if you're a wealthy individual and decide to allocate $1 million of your wealth to a gold kilo bar stored, let's say in Singapore, you've been working at it for a while. But if you see what's happening on the global stage, you say, I should be in a hurry. Because whether Trump is going to win the elections or Kamala Harris, doesn't matter, but the feeling was that there's some urgency, there's a fear factor, what's going to happen? Geopolitics, and it's a theme throughout the day. I think one of the reasons, because we're kind of placed in a pretty neutral jurisdiction, is that we don't know what's going to happen, and people are concerned, people are afraid. There's a lot of questions in all countries. I traveled through Asia in the last 14 months. In different countries, every person you talk to, from wealthy people to the taxi driver, everyone are concerned with rising cost of food, rising cost of energy. You talk to residents of Taiwan, they're afraid of the China-Taiwan conflict. Say there are conflicts in the Middle East, conflicts in Europe. So there's a big question mark around where we're heading in the world. And the pace of the change is so quick, right? That those individuals, they feel they're going to cement a position in gold to protect themselves. And it was interesting to see how the pace is accelerating as the price go up. And counterintuitively, my experience in the 14 years I've been doing it is that clients tend to buy when the price is going up rather than the price is going down, because there's a bit of a FOMO, fear of missing out, where are we heading? And again, because the price reflects to some extent the fear factor, they themselves become a bit anxious about where we're heading.
Yes, I think that's an interesting observation. You have fear of what's going on, and you've also got fear of not having as much gold as you actually want to have.
Exactly, yeah.
And certainly one of the characteristics of the move in gold this year has been a market that didn't really sustain a correction until just recently, but we'll talk about that further. Mohammed, how's the really strong gold market been reflected across your activities at SAM? How has the really strong gold market this year manifested itself in your activities?
John, I consider ourselves, honestly, maybe I always bring this in every panel I am on. I think we are lucky to be in a place like the UAE, being looked after by the government of the UAE. I'm being in the middle of a country where the infrastructure assists you to do many things than the others. One of the most important accomplishment for the UAE government, which is the CEPA comprehensive agreement, economical agreement with India. This has assisted us big time in terms of opening more doors for us in here, and able to sell more and open more markets and satisfy this increasing in demand. So I think, being in a location with this much of infrastructure, with this much cooperative government pushing businesses, I think this is something that we are truly lucky to be in.
Fantastic. Scott, my birthday is on the 1st of March. I'm not looking for presents or cards, but I say the 1st of March, this year was a Friday. I'd taken the day off on holiday, and that's when gold broke out, when the CTA started buying gold, and for all the talk of physical markets and gold and coin investments, to me, much of the strength this year has been driven by speculative investors on the COMEX market and other markets too. What's your perspective?
Sure. I partially agree with that, and I do remember that day in March, and I actually took a trip to China 2 weeks later in the middle of that rally, and that's really when my conviction grew on this bull market being sustainable, that as gold was rallying, the interest was growing, and historically there's been more of a sell the rallies and buy the dips in the East, and I think the US is more of a FOMO, buy the rallies. But I would actually say the foundation of this bull market goes back to 2022, which is when we first saw the relationship between US interest rates and gold start to break down. So interest rates were going higher, and normally that was a death sentence for gold, and we saw gold being stable and actually start to rally. I think the ETF overhang was really what prevented gold from rallying in 2022 and then 2023. But as the ETF selling, which had built up during COVID, started to wane, and that there were still ETF outflows in Q1 of this year, but it was slowing down dramatically. And by March, it was really almost at the end. I think the last bit of sales was in end of April. That's when we went. Those flows were out offsetting central bank flows on the buying side, and once ETF stabilized and actually started to add in May, that's when we really took off. So I do think in the beginning it was CTA buying. They're the fastest to catch the moves, just because they don't try to rationalize why it's happening. They just say this price is moving and I'm going to follow the trend. And I do think many of the hedge funds and macro traders actually missed the beginning of the move because they felt interest rates were too high. But now I think there's more of a widespread belief that this rally has legs.
Thanks. I mean, certainly speaking to many of the former clients of mine and counterparties of mine at the beginning of this year, I think most people I spoke to, and mostly in the hedge fund, the investor community, they were quite well disposed towards gold, but because of that high interest rate, they didn't feel they needed to be involved in it in the first quarter. They thought, gold will do well when rates start coming down towards the end of 2024, but they didn't really have the position on at the beginning of the year. So I think everything you said certainly is backed up by what I was hearing as well. Another way of looking at it as well is we'd seen such strong emerging market demand of all types, whether it's central banks, whether it's emerging market investors, whether it's jewelry markets from time to time, really over the past 18 months, that led to that disconnection between gold and interest rates, gold and the US dollar, such that when we did get a rally that came out of the CTAs, it just obviously started from a much higher base. Of course, now, we've had the biggest correction in gold that we've had this year. We got to a high, where was the high, Chirag? Was it just below 2,800? Yeah. Sorry, the big figures keep changing so often, you forget where you are now. And we traded off, what, $250? What's changed? What are you seeing or hearing now as a consequence of that deeper correction?
So, before I move on to that, John, you made two interesting comments about emerging market. And I think what is essentially changed in the emerging market is, the massive increase in investment demand for gold, which a lot of people had, especially if you look at India, right? A lot of middle class had moved towards equities, given the fact that Indian equities were doing so well. You are now seeing more and more people return to gold, but also the high net worth individual are now, especially in many countries like India, China, Thailand, Indonesia, are looking at gold as 5 to 10% of their portfolio. And I think that's something which is very, very significant. Moving on to, what is the reaction now? Something that we hear in India, we hear in parts of East Asia, that there is a growing amount of demand over the last, couple of weeks, which is visible as a reaction to, gold prices, especially from the investors and the consumers who are sitting on the sideline waiting for gold prices to correct. So we are now seeing that increased offtake for both jewelry as well as bars and coins. I think what we see is that if gold prices maintain at these levels and has a bit of leg up, then the investment demand will come back at a much rapid pace.
Alain, when you get these big sudden moves in gold that we've seen over the last couple of weeks, what does it do to your client base? I mean, the one area of the gold market that I probably don't know as well as others is the numismatic side, people buying older coins. My thoughts on those they would tend to be buy and hold investors that accumulate and hold it for a long time. Do they worry when the price goes down like this, or do they use this as an opportunity to buy more?
So what we've recently seen, as I was saying in the first part of the speech, when gold increased substantially, the premiums on gold coins went down. But now, with the correction and the way the correction happened, quickly, gold corrected about $250, if I'm not wrong. We've seen the premiums going up substantially on many different types of bullion coins, and especially what I was alluding to at the beginning, the scarcity of old sovereigns coming. And you think about it, the British Empire has probably struck 1 billion sovereigns historically, and not many of them are left. And now, with the correction of gold prices, you can't find an old sovereign on the market anymore. So I would say that the sudden move down was very favorable to the demand on the gold coins.
Joshua, high net worth individuals, certainly from the work that we've been doing with Metals Focus, have been a really important contributor to the demand side of gold in the last couple of years. Many I've spoken to indirectly through private banks in Switzerland or in Asia have said to me that they're waiting for a dip to buy in gold and have been frustrated this year that they haven't got a dip. They've got one now. What are they doing?
Well, as I mentioned before, it depends what the incentive for the investment is. If the incentive was, again, the macro, the more, I would say, analytical approach, then definitely we see now a good opportunity to go into the market. And that's what we tell clients, a good opportunity either to go into the market or to increase the position. And we are seeing family offices from China and from Philippines, for example, buying a bit more, utilizing this dip. If you are on the side, I would say, the more emotional, as I mentioned, the fear factor, the what's going to happen, I'm concerned, then actually there seems to be a bit of calamity since Trump got elected. I think, as Jordan Belfort mentioned earlier, it seems like the dollar may get stronger, maybe heading to a bit of more a stronger, generally a stronger United States, good for business and all that. Maybe Trump could sort things out. So there seems to be a bit of calamity, and suddenly the urgency is not there. So now it's more, let's wait and let's look at other alternatives. And by the way, I don't think it's surprising that the Bitcoin price appreciate during this dip in the gold market. I think some liquidity has been moving actually across the two opposite sides of the investment portfolio, from the very risk-averse side to the high-risk, high-reward sides. And we've been seeing that because we're also involved on the crypto side of things. So it really depends on the incentive. So either you buy more or you now wait and see what's happening, see how things develop in the on the geopolitics, on the U.S. economy, and so on.
Mohammed, how does your market, how does your business change when gold drops $250 in the space of 2 weeks? Do the phones start ringing and people wanting more supply, or do things go quiet and wait and see what happens next?
Now, after the recent price correction, John, I think technically there should be increasing in the demand, but we did not see as much demand as we have expected with this recent drop. I think people are still not confident of the price. Will it remain there or will it take another dip? So I think this is a crucial stage now for a few more weeks until things are settling down. But it is now a very crucial stage. People will have to sit and watch a little bit. Honestly, I expected the demand to go really high, but it did not happen.
That's a really interesting observation. Scott, when I worked at an investment bank, not as a trader, but as an analyst, I used to sit in the good old days amongst the sales and the trading team and get to hear what was going on all the time. I would have considered a dip like this we've seen to be positive for the market, and certainly positive for me as an analyst, because one of the things, when gold goes straight up, or when anything goes straight up, you're never quite sure where the support is. I'm interested now to see where the buying comes back. What are your thoughts in terms of this correction? How far has it got to run? Should we wait, or be looking for the net long position on COMEX to be extinguished completely? How are you thinking about the market right now?
Sure. I mean, to me, high prices really aren't a problem for demand. It's mostly about the speed of the move. And I do think that some buyers were becoming a bit shy just because we had moved up so quickly. And they felt like they had missed the boat, but they did not want the embarrassment of buying the all-time high, which was the 5th all-time high in a row. I do think this pullback was positive for the market overall, as you said. I think that COMEX had gotten a bit too long. The ETF inflows were quite fast in Q3. So the reversal of those did contribute to that large move. I think we saw about 1 million ounces come out of the gold ETFs, and maybe 40,000 contracts, which is equivalent to about 4 million ounces, come out of COMEX. But we did see buyers emerge below 2,600, especially as we got to 2,550-ish range, 2,570. There was quite a bit of activity in the last week, just this current week. Now it's moved back above 2,600 quite quickly again. This, I think, on the geopolitical risks right now. So if we go back up to 27 very, very quickly, the window might have been a bit too short to spur this new, the demand that had been waiting, because there is a time element to the demand. But if we stay here, I do think people who felt like they had missed the boat in the 2750 range to the all-time highs will come back to the market. So this, I do agree with you. This has been a positive.
Fantastic. Being reminded that we're not only talking about gold, just to talk a little bit about silver. I know there's an awful lot of enthusiasm in silver from investors all the time. It does surprise me that we're talking at gold at 2,600, 2,500, yet the all-time high for silver was set back in 1980 We got close to it in 2012, 11, I can't remember. But silver is and has underperformed. How should we think about that? I mean, is this a metal that, because of its industrial uses, just isn't going to do as well as gold over the long term? Or is this one of the best opportunities out there at the moment? What do you think, Chirag?
Well, we have a pretty constructive view on silver. We are looking at, a couple of years, we could look at silver prices higher, above 40, 45, around $40 to $45 range. I think you make a valid point where silver is both industrial metal as well as precious metals, and it all depends upon what time, what kind of factors is playing on silver. So we had a situation where probably the view on the global economy was not that great, base metals were not doing good, and silver had that overhang. But I think what we are seeing in 2024 is silver moving out of that, more closer to the way gold is moving. While it is still underperformed, we believe that fundamentally silver is much better placed than gold, given the demand that we are seeing both from industrial segment as well as investment demand has been fairly good. I think for silver, essentially, what is stopping really is the fact that there is always a fear among people that the moment silver goes higher about a certain level, there will be thrifting which will come in, and that will lead to a bit of overhang of silver. But we don't think that at this moment that is a key risk. Probably, yes, that could be a risk when it goes above $50. But at this moment, I would say fundamentally silver is much better placed.
And on the coin side, I know a little bit about historic gold coins. I don't know much about old silver coins. Do you see much interest in famous old silver coins like you see in gold, Alan?
Well, I think the interest for silver coins has always been there. This reminds me of something quite interesting that we always tend to forget is at the time of the Hunt brothers, where the silver reached $50 an ounce, it was probably the last time, and you're a specialist and I'm not, so correct me if I'm wrong, but I think it was the last time where a metal was fully cornered by a group of individuals. And so I don't think that anyone can corner the gold market, but the silver was cornered by the Hunt brothers at the time. That's why we saw this incredible price of $50. So I think it should not necessarily be a reference for the world of analysts. And the anecdote is the Hunt brothers ended up to be the biggest old coin buyers of the market, and they decided to corner the ancient coin market as well. So coins that were 2,000 years old and so on. They decided to buy everything that the world had to offer. And so they did corner the ancient coin market as much as they cornered the silver market in the 1880s.
Yeah, fascinating. I've actually got a really good anecdote about the Hunt brothers, having met one of them about 15 years ago, but I can't share it with you all now. But if anybody's interested, catch me over a beer later. Joshua?
We know on paper silver has upside, right? The gold to silver ratio is relatively high as we talk about the industrial appliances and maybe shortage in supply. So if you're new to the market and you're now building your precious metal portfolio, yes, silver is something you're looking at. But if you have experience in the precious metal market, we still have clients that have been painfully paying storage bills on tons of silver they bought during the rally 10 and 12 years ago. And they're totally disillusioned by silver because they were expecting silver price, I'm talking about 2011, to really rally even more. And what they ended up is losing a third of their investment and just getting the storage bills sent to them on a yearly basis, and that's painful. So I find silver very interesting for new, but even for me, it's hard in a way to explain, as you mentioned, why gold is at all-time high and we're still 20% below silver all-time high. And I'm talking about 2011, not even before that, right? So it's a bit different to explain it to clients. So if they're new, we tell them, yeah, you need to, they'll tend to be about 40% of our clients will have both metals for diversification purposes. But if you got hit in 2011, then you don't want to hear about silver. Tell them silver, they just hang up the phone.
Yeah, it's interesting. Speaking to a few refineries, I've heard that during the strength in silver this year, they've been getting a lot of old investment gold back that has been held, not even just since 2011, but since the late 70s, early 1980s. So for all the talk of shortages of silver in the market, like gold, we have to be aware that there's an awful lot of investment gold and silver that has been bought at certain times. And I think you're right. I think there's a lot of disappointed silver bulls out there from many decades ago. One of my former colleagues at UBS, her father has a number of bars in her loft, some of which they actually painted black and used as doorstops because they'd had them for so long and they didn't want to sell them.
Right, and also remember the premiums on the silver products in terms of percentage are super high. So again, it's difficult for some clients to understand. And you know, wealthy people are usually quite smart with money. It's like, why would I buy silver at 5% premium, but can I buy gold for maybe 1% premium? What's the benefit if the price is not going rocket high at the same pace as gold?
And let's just not talk about premiums on silver eagles because they wish they could buy them at 5%. Huh? I assume that Sam Precious Metals also does silver. You're a silver refinery as well as a gold refinery. What have you seen from your flows that would help us understand why silver has performed so well, and maybe what could we expect going forward, Mohammed?
From a physical perspective, John, I won't be commenting more on the pricing of the silver, but I can be more giving you more insights about the physical side of the business. We are the largest silver refinery also in the UAE. I have to mention something that during the last year, the SAM managed to export round about 1,000 tons to India on the CEPA agreement. So where we have by far a very good capacity on processing silver and having it for export to countries like India where high consumption is there. So we are a perfect hub for this type of precious metals. And yes, we're seeing a very increasing demand on silver, even from consumer perspective. I believe the consumers now, their buying behavior has been changing. So whoever cannot afford to buy gold, he will go and buy silver. And this, hence, the increase more on the silver coins. And this is what we're witnessing also.
Now that's interesting, isn't it? Because if you think of, you know, the highs in silver we saw in 1980 was very much a US phenomena. And some of the investment demand that we've seen since then has been US and to a certain extent European. To the extent that high gold prices are now persuading some emerging market investors to look at silver, maybe that's a whole new category of potential investors there that could really change the dynamics in the market. Scott, somebody said to me the other day an expression that I really quite like when they're thinking about silver. If you think about it over the longer term, we always think about the gold-silver ratio, and the idea being that gold and silver should have some sort of underlying relationship, and whether that ratio is 50, which it was when I started, and then 60, and now it's 80. But in the long run, they more or less move in the same direction. As an investor, though, if you're buying silver, and you were expecting it to perform more or less in line with gold, sometimes outperforming, sometimes underperforming, you're paying what, a 10-vol premium? Or you're owning an asset which is, you know, has 10-vol more volatility than gold. Why would an investor ever look at silver when it just gives you what I was described as return-free risk rather than risk-free return as we're talking about?
Well, I think maybe you hit the nail on the head there. Many investors just avoid it, and certainly in the central bank community, I don't know of any that are more than dipping a toe, if anything at all. And I think in the institutional space, it's much less. I mean, there is the SLV ETF, which has quite a bit of silver in it. I think 600 million ounces, and has been relatively stable. But as you said, silver has about twice the volatility. Similar return profile. Our house view is actually quite supportive of silver, and I think personally as well. I do think from a fundamental standpoint, it's strong. We have a saying on the desk that silver often lags and then comes from behind to catch up quite quickly. So I do think the lack of investor demand maybe keep silver behind, but at some point the fundamentals will catch up, and we could see a big rally to everybody's surprise.
Yeah, and we sort of hinted at it before with its industrial uses. I always think of silver as being half gold, half copper. And if we get to a situation where the global economy starts to pick up and recover, and yet we're still seeing gold strong because of geopolitical or macro fears, I think silver could surprise to the upside. I think that's certainly there. Now, I'm conscious that we're beginning to run out of time. I'm going to raise a topic which is not my favorite, but I have been asked. What are you seeing, hearing, thinking about Bitcoin and other crypto assets hitting all-time highs on the basis of your experiences in various segments of the market? Do you think this is damaging gold? And I'm particularly thinking over the last few weeks and months rather than in the past. I'm thinking this run to all-time highs in Bitcoin prices, are we seeing any clients, any sides of the market selling gold and buying Bitcoin instead?
So I'll focus on Asia, especially. I think in the Asian context, we have not seen a significant shift of investors from gold, silver to Bitcoin. I think for a lot of people in Asia, Bitcoin has a fashion value where it's nice to have it, but is that a serious investment option for family offices, individual investors? I don't think so. I think still gold and silver play a very, very important part, and that is visible in the demand numbers. Even at these higher prices, you are seeing robust demand coming in from Asia. So I would say Bitcoin is interesting, but does it pose a threat to gold and silver in Asia? I don't think so.
Oh, that's useful. Anna, does it come up in conversation at all? Bitcoin?
Well, I don't think there is much relationship there. I think the rise of crypto, Bitcoin, etc., is also due to the Trump election, obviously. And also, it might also be due to the fact that my beautiful field might at some point be out of material, because what governments want today is to abolish the cash, whether it's coins or banknotes. So yes, that will definitely help Bitcoins and cryptos for sure.
How about you, Joshua? You hinted at it before that you thought you might have seen a bit of switching going on.
Yeah, no, but actually I was in Dubai last week giving a presentation on whether Bitcoin is the new gold, and my answer is no. But and we heard it earlier this morning from Belfort. The thing with crypto is it provides, similar to gold maybe in terms of mindset. I say it's a global decentralized store of value or currency, depends how you look at it. And on this, investors sometimes look at it in a similar way. And they see an opportunity now to maybe get some liquidity from their gold holding and go into the Bitcoin. I'm talking mostly about Bitcoin and Ethereum, and go into this field just to enjoy the appreciation. And I mentioned, I think it's not a coincidence that there were I think some of the liquidity following the dip went to finance purchases of crypto. We have a company in Hong Kong helping high net worths convert between gold and crypto, and a lot of the time the conversation there, you made a lot of money. It's time to solidify your holdings by converting your Bitcoin to gold. So now we see the shift. So there's some liquidations of gold. They want to convert it to crypto. And I know that probably when the rally of the Bitcoin will be done, we'll get a call like, okay, we're done with the Bitcoin. Can you take that and give us gold instead?
Fascinating. Mohammed, does Bitcoin come up in any conversations that you have with your clients? You're not refining it. You're not mining Bitcoin on the side, are you? No?
No, my clients typically talks about physical gold and physical gold. So if you ask me, my personal opinion, Bitcoin is something you can't turn your head away from it. There should be a different use for that. But I think it cannot replace gold. I mean, why would you keep, as Shirak said, family offices, investors, they would love to invest into something tangible. If you look at people now, they are withdrawing from ETFs and going back into physical, having the desire of holding some assets with them. I think gold is a little bit difficult to be replaced
So
Yeah, I was very interested to hear Chirag describe it as a fashion thing, because I can't see how you can wear your Bitcoin. But anyway, that's another joke. What do you think, based on your perspective, institutional flows, client flows in gold, in silver? I don't know whether you've got a Bitcoin desk at JP Morgan. I don't know whether you talk to them and whether you hate each other or how it works. So what's your thinking here, Scott?
So I do think that Bitcoin is a competitor to gold for a certain segment of the community, the investor community. If you look at the Bitcoin ETFs, the fastest growing ETFs, I mean, GLD at one point was the fastest growing ETF out there, and the BlackRock Bitcoin ETF, I think, eclipsed it's in 2 weeks or something, the first 2 years of GLD. So I think there is growing interest in it from a financial standpoint. I would say the jury's still out. Gold has a 10,000-year track record, and Bitcoin has a 10-year track record. So I think it's too early to tell, but there is growing interest, and I do think it's starting to permeate into the institutional space.
Yeah, I think that's right. I think that it is beginning to permeate the institutional space. You can see it from the ETF holdings. But very much, about the one thing I agreed with Jordan Belfort was that it's not crypto or gold. It's both.
We do see clients with both.
It's a complementary asset. They do very different things in your portfolio. If you've made a decision to buy crypto, just recognize that you've got a lot more risk than you used to have. And what's the best way to diversify a portfolio with a lot of risk in it? You put more gold into it. Now, I'd like to thank the panelists. I'd like to thank the DMCC for the opportunity to speak here. We're out of time. Thank you very much. I don't know why you want photographs, but we're all
Great, thank you very much. Great panel, really interesting. Gentlemen, thank you so much indeed. In a little while, we're going to move on to another panel looking at the transformative potential of technology in precious metals. But before that, we're going to stay with macro analysis and the price outlook. We're going to look at the In Gold We Trust report for 2024. Please welcome to the stage Mark Valek, Fund Manager, Incrementum AG. Mark.
Ladies and gentlemen, Excellencies, good afternoon. My name is Mark Walek. I'm fund manager and partner of Incrementum, which is a wealth management company based in Liechtenstein. We write about gold pretty extensively in our In Gold We Trust report, which is a publication which is published once a year. It's 400 plus pages, but there's also a compact version, and it's available for free. You can just Google it and you can download it as a PDF. And I would like to express my gratitude at this moment, because without our dear partners, it wouldn't be possible to put out such a big publication for free, especially highlighting DMCC, also for supporting us, and also thanks for inviting us here for the third time in a row. So this year's gold report was called The New Playbook for Gold. And before I'm going to talk about the new playbook, I'm going to talk about the old playbook, and also last In Gold We Trust report, which we termed Showdown. And when we were talking about showdown, we really highlighted three elements: the showdown in geopolitics, the showdown in monetary politics, which we anticipated was going to happen, and which we thought would lead to the showdown in the price of gold. And I think that actually turned out pretty accurately. What we saw this year was a significant increase in prices. We saw 40% price increases year to date. Now we've had a little bit of a pullback, but we're roughly at close to 30% year to date, which brings us close to the best year in the century. So if we have a little bit more performance, we will actually end the year as the best performing year of gold in dollar terms. But looking back a little bit, what we can see, we had a huge cup and handle formation, which has actually been building for years. And now we've got this breakout, and we're going to talk about this, why this is so significant, especially under the current conditions. So the old playbook was actually defined by the most important factor, which was explanatory to the prices of gold, and that was the real interest rates of the US dollar. You could actually explain a lot of the price development of gold when you look at real interest rates and the gold price. So what you see here is real rates of the US dollar inverted, meaning the blue line, when it falls, we see rising real interest rates. And on the other side, obviously, the price of gold. And something very significant happened roughly 2 years ago. A huge gap opened up. So the blue line fell, meaning real interest rates have been rising. Inflation came down, rates came up, which is equals to an increase in real rates. And the price of gold didn't fall, but it rose. And it rose substantially. So that would have been unthinkable in the old playbook, and that's why we examined the possible reasons for these new developments. Let us have a look at what different types of investors have been doing. And again, this is also a big part of the old playbook. Financial investors, especially Western financial investors, were actually the marginal buyer of gold. And this thesis is supported by this graph, I think, quite impressively. What we see here is the gold holdings of ETFs, which are typically investors' first choice for building up gold exposure. And you really saw a very high correlation between the gold ETF holdings and the price of gold. And again here, we can point to the year 2022, where this big divergence starts building. And again, I think it's quite rational for Western investors to actually have sold gold under these new real interest rate regimes, because obviously holding gold has an opportunity cost, right? So you can have bonds which give you yield, or you can hold gold which doesn't give you yield. And the second that you actually receive yield, holding gold becomes more unattractive. But then, of course, there's more to it. Gold, as we all know, is the one and only asset which has no counterparty risk. And this counterparty risk became very relevant 2 years ago. And so the new marginal buyers, we would say, is not only the Western financial buyers, but also central banks being one of them. We heard about that quite a lot already today. We've got here a chart about the demand of central banks. We all know central banks were net sellers until the year 2009. And after the GFC, central banks became net buyers. They are currently buying up 30% of total mine supply, annual mine supply, and this has been going on since 2 years, again going back to the year 2022. And this is a significant amount which is basically already taken away from the market. And this is obviously got to do with the conflict in Russia, and especially also with the sanctions which followed from the West. So the world is looking for a counterparty-free asset, and central banks are one of the main investment drivers. Going back even longer, one can actually see that central banks typically held much higher allocations towards gold. So central bank gold holdings were more in the ballpark of 30, 40, or even 50% of their total reserves. And this number fell very significantly till the year 2000 or in the 2000s, where it bottomed out roughly slightly above 10%. So the role of gold actually decreased for some decades within the central banking system, and it is now on the reversal. And we think this is also a big argument that this is a structural development. We will see structural demand from central banks also going forward, because there's actually a lot of potential for higher movements going up here. We heard in the morning in a very interesting panel regarding BRICS, the number of 40% gold backing for potential BRICS currency or settlement currency. And that would be quite in line with some historical numbers. So we are currently close to 20 percentage points. A lot of room to go up here in the next years, in our view. Another big support factor has been the increased demand from emerging markets, also from the private side. We've been seeing larger growth from emerging markets in terms of GDP, but also larger growth in terms of population. So in the last 10 years, emerging markets grew more than twice the factor than developed markets, and the same is also true for population growth. And this is, again, also a big structural factor which we think will keep continuing and will provide gold demand with a tailwind. This is also quite interesting. One can see in the data that the demand for gold actually seems to be quite strongly coming from Asia. These are monthly figures, and one can see that there's a divergence between the gold price development in Asia versus in Europe and the US, in some months at least. But the tendency seems to be that the gold price rises more, slightly more, during the Asian time tradings sessions than in the US and in Europe. Again, supportive of the thesis that emerging markets play a bigger and bigger role. BRICS, we've been talking about this quite a lot. I won't go into it in a big detail, but I also do think that the discussions regarding some kind of a settlement currency with the gold element will be a big part of the story for gold going forward in the next years. So let's look at the other side of the world shortly. Everybody is trying to figure out what this recent election in the US means for the markets. And we obviously are very interested to think about what are the implications for the gold market. I want to point out this so-called Department of Government Efficiency, which Elon Musk and Vivek Ramaswamy are leading or are going to lead. And there are a lot of big ambitions when it comes to the Department of Government Efficiency. Numbers were thrown out that the current spending of 6.7 trillion in the US should ideally be cut at least $2 trillion. This is a very ambitious plan, and this is obviously very debatable how realistic that really is. Still, I think one has to look onto these developments, even though this, at the end of the day, may not be achievable, at least in this kind of extent. I think the narrative alone could help bringing the dollar stronger for a while, and in reverse, dampening the gold price. But then again, one will have to really look at the results, and this is obviously open. We will see if they really are able to basically change the trend of this exponential line, which is obviously government debt, public government debt, which has been, as you all know, rising in basically one line, and actually the rate of increase has increased during the last decade. So this is a not sustainable chart, and this is one of the very big arguments in favor for gold. And if that should be able to be controlled, then I think this is something which one should watch as gold investor. But again, it's not our base expectation scenario that real significant savings will be able to implement it. I'm glad that I'm not the first one who talks about Bitcoin, but I would like to just implement this thought also. And if you allow me the question, who has heard of the strategic Bitcoin reserve bill? Would you mind giving a hand sign if you have already heard of this bill? No, I don't see any hands at all. So this is a bill which was proposed by a Republican senator already in summer, and it states that the US should actually implement Bitcoin as a strategic reserve. And it proposes the purchase of 1 million Bitcoin within 5 years. That's a really big number, considering there are only close to 20 million Bitcoin around now, and a lot of them are actually already lost. And this is, I think, a big part of the recent move, or also when it comes to the Bitcoin price. This is a little bit of a provocative cartoon here, but it is, I think, something which one should also monitor to some extent, especially since Senator Loomis recently also proposed the financing of the Bitcoin by selling some of the government gold. And this is something which is, I think, quite revolutionary. Again, here, a lot of question marks open. Is it really politically feasible that this is going to be passed? I don't know. But on the other hand, one has to also acknowledge there was a red sweep, so there is actually quite a big part of power in the hands of the Republicans. So I also wouldn't rule this out completely. And this is, again, something I wanted to point out here very briefly. Apart all these longer-term topics, we also have medium and short-term developments. I mean, one of the classical factors for the gold price is economy and monetary policy. Currently, economy in the US looks pretty sound, but still the Federal Reserve has embarked in a change of monetary policy. So interest rates are being lowered again, which is typically very supportive for the price of gold. In our view, especially when the next recession will come, and this is unavoidable, obviously the reaction will be further easing and more debt, and latest at that point, we expect a new leg up in the price of gold. Just to show some comparison, what happened in the previous bull markets once we actually hit a new all-time high. And also one can see here there's actually still room for more appreciation, especially if one looks at the bull markets at the 70s, but one can even be more conservative and look at the bull market in the 2000s. So we think there's also room to go here. Concluding with our price target, which we formulated in 2020, where it was a pretty bold expectation target with $4,800 at the end of the decade. And we are actually now back on track with this path. We actually overshot this mathematical path to the 4,800 recently. So I think it's quite good in terms of markets that we are taking a breather right now. But just to put some numbers to compare this path with also, again, historic paths, this would actually only need a 10% price appreciation for the remaining decade, and that was actually less than we saw in the 2000s and significantly less than we saw in the 1970s. So we are confirming this price target. Conclusions. Gold is decoupled from its inverse correlation with US real yields and ETF flows. Central banks and emerging market investors are now in the driver's seat, while Western financial investors are still on the sidelines. Obviously, they could come back, especially if we see bigger monetary easing. One key factor in the short term, as I pointed out, is the success of the Department of Government Efficiency, and perhaps not only so narrowly this department, but generally the economic policy of the Trump administration more broadly. Gold in competition with Bitcoin as a strategic reserve, something to monitor, especially if this bill passes. The next recession will likely provoke more debt and currency printing, possibly triggering the next leg up for the price of gold. And as I said, we confirm our price target of $4,800 at the end of the decade. And with this, I say thanks and enjoy the rest of the conference.
Thank you very much. We've come to the final panel of the day, where we're going to look at the transformative potential of technology in precious metals. Please welcome to the stage our speakers: Faisal Ahmed, CEO and Managing Partner, AKW Consultants; Saji Kokodi, Group Chief Digital Officer, Malabar Gold and Diamonds; Hans Schwab, Co-Founder, Origin Oil; Matt Ong, CEO and Founder, Control Alt; Kevin Kilty, CEO and Founder, HubPay; and your moderator for this final session for the day is Sundaravali Narayan Aswami, Associate Professor, Indian Institute of Management, Ahmedabad. Please welcome everyone to the stage.
A very pleasant good evening to everybody at DPMC 2024. And it's a pleasure to be here. And thanks to DMCC for inviting all of us for this interesting panel. And my name is Sundarvalli. I'm a faculty. I'm a professor at IIM Ahmedabad in India. And we are one of the top business schools in India. And I'm currently also serving as a chairperson of India Gold Policy Center, which is funded by World Gold Council. And we do a lot of work. And by training, I'm a hardcore engineer, a techie by heart. And so technology is my first thing, first love. And I'm glad that, DMCC gave me such an interesting topic for me and a very esteemed panel of speakers along with me. And so this topic is going to be very interesting, and it is very close to my heart. And closer to my heart is gold, anyway. Yeah, so I have some interesting panel members. In particular, some of the things that we keep talking about at IGPC is, where exactly are we heading, what is the role of technology? Long ago in my PhD work, in my doctoral thesis, I made some, I did some applications of AI and machine language in some hard industry problems. And now the world is changing, and we are all focusing on, a lot more of assets which can be used for hedging and which can protect us from a lot more certainty and safety and security. Globally, the trends are, changing a lot. In particular, today, since morning, we have listened to a couple of talks. Many of them were talking about blockchain, AI, anti-money laundering, fraud prevention, and how countries and how traders and how resourcing can be responsible resourcing. Several things we have heard about this. Now we have an interesting panel, and we are going to see what exactly is the role of technology. Is this technology a fancy thing? Does it serve any more purpose than a fancy or a vanity? That is something that we have to say. And what exactly is the value addition the value creation that it can give to one particular entity. This is something that I would like to know. As much as the audience is interested, I am also very keen to understand from my esteemed panel speakers who come with a very rich experience, rich professional experience in this gold sector, in precious metal sector, and I'm also keen to learn from each one of them. And first and foremost, let me go to should I go by any order, or how do you? I think I would go to first with AKW Consultants. I'll go with Faisal. Faisal, you come, you come from a rich anti-money laundering risk management experience. Given your experience and interest in compliance, what are the emerging trends that you're seeing? Where exactly do you think AI or blockchain can improve the traceability and transparency in this precious metal sector? You are sitting out of UAE, and we would like to think, and we are all very well aware, if something cannot happen in UAE, rest of the world, forget it, UAE has been very enterprising in adopting anything new. And in a sense, we are a fantasy world. UAE is a fantasy world, but they make things happen. They make things which are unknown elsewhere happen. So this is a nice, good place to try it out things. What is your experience, and where exactly do you see, are we evolving in terms of technology in enhancing traceability, transparency? Over to you, Faisal.
Thank you, Professor. See, if we talk about UAE, it's always on the forefront. And if you look at DMCC in particular, it's an innovation hub. It's for technology. It's always been there, leading from the front. So talking about the precious metal sector, we are still in the infancy of technology being implemented in this sector. But I'll go back 2.5 decades or almost 3 decades ago, where technology was being implemented in the banking sector, because I've significant experience in the banking sector when it comes to addressing problems around money laundering, problems around counter-financing of terrorism, and how technology has evolved. If I look at precious metal sector, we need to actually set on the same journey. Yeah. You look at, when we talk about traceability and transparency, these are the two major things to be addressed in this sector. So if you look at the use of blockchain technology, artificial intelligence has tremendously helped. If we are using blockchain technology from the point of origin of gold all the way to the end consumer, you are able to track it, you're able to trace the origin of gold. If you're looking at real-time tracking, if we implement technology which actually has real-time tracking, you're able to look at the history of the proof of where the gold emerged from. Smart contracts, we know insurance industry is using smart contracts. If we can embed the smart contract data points into the blockchain technology, then it will be able to identify those patterns. You see, generative artificial intelligence, when we are using this kind of technology, we can predict patterns. For example, if you'd see, let's say, large purchase of gold, it's a trigger, it's an alert. Or all of a sudden the countries change. You've been importing from a certain country, and all of a sudden it changes. That's another trigger point. So if we are looking at patterns, by use of generative AI, we are seeing actually you are able to actually predict. You're able to identify patterns. This is exactly how the banking sector has been working on transaction monitoring. We look at complex, when you see the challenges around complex entity relationships. So again, the use of technology, you can actually map it. You can map complex entity relationships to various public forums, negative news, adverse media. You don't have to do it manually. Right now we are concerned, and one of the concerns is about costs. What about cost of compliance, cost of technology? Well, let's make technology as an enabler for your business. You can use smart technology to actually fulfill a lot of these challenges.
Thank you very much. Thanks very much, Faisal. My next question is to Mr. Shaji Kakodi. Chief Digital Officer, Malabar Gold. And among the panel members, you are, most of all the other 4 panel members are they operate in a, by and large, predominantly a B2B sector. You come from a little bit of a B2C background as well. With your global presence and Malabar Gold being, as we talked about, you're the top 6th retailer in the world, and your business has grown tremendously well in recent past, in the recent times. And how blockchain or how technology has enabled you, how technology has helped you in this, where do you see the future of technology in gold retail, either in the B2C or in the B2B market?
Thank you, Professor. Good afternoon, everyone. It's great to be part of this panel talking about technology. As you said, Malabar Gold and Diamonds is, if you're in Dubai, you can't miss us. We are about 370 stores in about 13 countries. So we are strong in retail. We have a strong back-end manufacturing as well. So when we talk about blockchain, responsible sourcing is very close to our heart as a brand. We only procure good delivery, accredited the bullion, even though it means procuring it as with a premium. So with that said, I think when I was talking to the folks at LBMA, they were partnering with World Gold Council to bring up a platform where you can, they have been working for the last 1 year to build up a platform where they're using blockchain to trace gold bars and gold coins and gold biscuits. So I think that's on the B2B side of it. So it is also on an experimental mode. I think they are planning to launch it in the near future. But of course, taking that into the retail space is a lot more work, because as we know, there's a lot of complexity in the B2B space as well. We as Malabar Gold, as I said, it's from a responsible sourcing, traceability is very close to us. We are always open to partnership in those endeavors as well. Being said that, I think the other side of the question that you asked was about how technology from the retail space, right? From a jewelry retailer perspective, we are an anomaly when it comes to investment in technology. We do significant investment in technology because we see technology as a driver to our business than as an enabler. We have one of the key areas that we do investment is the analytics and AI, and another area is inventory optimization. In the case of, I would say, from analytics for customer experience enhancement. So with all the 350 stores, the retail points generates a lot of data, different digital touch points with our customer. At the same time, we have digital touch points at the online as well. With all this information, what we intend is to have the best experience for our customer when they walk into our store, whether it's online and offline. A personalized customer experience is what the customers look for. The new generation of customers, they expect that personal experience they walk into our stores. So we are always looking out, segmenting our customers, building a merchandise that is catered to that segment of the customers who are walking into our stores. If you look at the way the stores are spanned across, especially in India, if you look at the Dubai market itself, we have about 7 stores in the Gold Souk itself. And each of these stores have different merchandise catering to the different segment of customers who walk into our stores. So this is all coming from analytics and the analysis that we do with the data that we gather from our stores itself. So if you go to our stores, we will see all of our sales associates are enabled with clienteling applications when they work with our customers. These are all digital touch points that we work with. So these are areas that technology currently enable us. Then, as I said, the inventory optimization is another key. In gold industry, gold is a high value. Turns is important to all of us, especially even if you do B2B or B2C, how much turns you get is important. To get those turns, how do you optimize those inventory? The inventory, the right time at the right place, right quantity, right? It's very important, and gold business is seasonal. So getting that inventory at the right place at the right quantity is what will make the difference in doing business.
A quick follow-up question. You say about data analytics. How do you look at you expand to new markets and new cultures, and where you may not have historical data? How do you deal with that?
We have a strong market analysis team who goes before we start a store there. They do, they work with different associations and which they do a lot of research on the data that is available online and with consultants who bring us those data. And another area that the customers, we have a profile of the products that a particular market uses. We use that information to profile that customers against those the merchandise.
Thank you. Mr. Hans, you come from Arjunal, and you have a good amount of experience in anti-counterfeiting technologies, and you talk a lot about traceability and illicit trade. What exactly do you think, in terms of responsible sourcing, in terms of blockchain, verification, data encryption, how do you think the sector can benefit from technologies in preventing fake and illicit traded products?
Thank you, Professor. First of all, I think it's always important to remind ourselves what is illicit trade, what is counterfeiting. Counterfeiting alone, depending on who you ask, OECD, ICC, World Economic Forum, other structures, the number is somewhere between 1 trillion and over 4 trillion. We were a year, just counterfeiting. And then on top of counterfeiting, you need to add illicit trade. When it comes to transparency and traceability, it is a simple requirement. We will not go around. Traceability of materials is something that is required today, will continue to be required in the future, and you cannot move forward without it anymore. The proof of how transparency and traceability is important to us, I think, is best demonstrated here in Dubai. This morning, His Excellency mentioned that since 2023, Dubai is the second largest trading hub of gold in the world. And why? Because it has embraced technology, it has embraced transparency, and it mentions it in every aspect, in every shape, in every program we have, as it was last week on the Diamond Conference and here again. And when His Excellency Ahmed bin Sulayem mentioned that, okay, we're second, but the gap to the first, Switzerland, is still very, very big. I'm Swiss, and I can say I believe that gap will shrink very, very fast, because nowhere else in the world do you have that focus on technology, transparency, and traceability, and you also don't have a Ahmed bin Sulayem in Switzerland. So I think that gap is going to shrink extremely, extremely fast. For me, it is something, technology today also became omnipresent. We have been in this market for over 20 years, working on traceability. 20 years, the focus was exclusively on cost. And it cost too much, and particularly when it came, for example, here to artisanal mining, it was unthinkable to actually have traceability. Today it is possible, and it is absolutely necessary also to ensure that the level playing field exists. And blockchain, when it comes to trust, as I always mention, needs proof, and proof is given through technology. And you had mentioned a few aspects and layers, for example, when it comes to payment infrastructures that are still not deployed and where we're really lacking behind. I would argue that today in 2024, when we think about 10 years ago, where we thought we would be with blockchain today, we're probably at 5% of that only. And when it comes to AI, it's probably a fraction of that. And that means that the future has tremendous opportunities that we will be facing when we truly embrace these technologies in the ways that we said we would, but we never did, and in the ways that we have to embrace now.
Okay. So what I hear from you is like, it is for traceability, technology is improving the trust.
Yeah, well, it's integral part of the trust. You cannot build trust without technology anymore, because you need proof of authenticity, and for that you need technology.
Okay.
When I heard this morning from the CEO of the MCC that a single transaction, I think, requires 28 or a little bit different documents, that is something that needs to disappear. This is where the technology needs to come in. This has to be on a trusted blockchain ledger, on a trusted supply, which is complemented by a payment infrastructure with the appropriate smart contracts that the system relies on then.
Sure. Trust building along with process improvements and making processes more efficient, more transparent, more quicker. Yeah. Thank you. My next question is to Matt. Matt, you have recently here, Matt is a founder of Control Alt. You are talking about democratizing access to alternative investments, and you recently entered the UAE market. You focus on alternative investment via tokenization. One thing that most of the audience would be interested in knowing is, what do you mean by tokenization? How do you envision this tokenization in the precious metal sector? And how do you think this tokenization can improvise liquidity or better asset management? Can you elaborate on this, please?
Yeah, sure. So it's really interesting hearing the other panelists talk about their usage of blockchain, and tokenization is the usage of blockchain, but for another purpose. So tokenization is quite simply the representation of an asset on the blockchain. So the blockchain is a form of distributed ledger technology. It's essentially a ledger for you to record ownership. And so when we think about tokenization, we're recording ownership of these assets on the blockchain. And that can be applied to any asset, theoretically. It can be applied to real estate, it can be applied to funds, it can be applied across that alternative asset world. And the reason why we use tokenization is to, as you've mentioned, to make it more efficient and easier for people to access these kinds of assets. And one of these assets is gold. So the concept of tokenizing gold has something that has been discussed for quite a long time, but the implementation of it has been challenging. So when you tokenize gold, you're essentially issuing a digital token on the blockchain that is then linked to that gold. So what are the benefits of that? Well, primarily it's an access problem that tokenization solves. If you're able to buy these tokens in much smaller quantities or amounts, you're able to open up gold to a much wider audience, and that's super effective. That's super interesting to people. I think particularly here in the UAE as well, where accessing gold outside of buying the physical can also be challenging. It has to be Sharia compliant, for example. Tokenization of the physical gold is something that's really attractive from that perspective. It's something that then makes it possible for people to, again, invest in gold when they previously wouldn't have. There is also the concept of liquidity. So if you've got these tokens representing gold, you can transact in them a lot easier. They might be in smaller denominations, which means that more people can trade with them. So we see tokenization of gold as an evolution, a new way for people to get exposure to this particular asset, not just gold, but all kinds of asset classes. And that is enabled through blockchain technology.
Okay. Thanks, Kevin. Thanks, Matt. And finally, I'm going to Kevin. Kevin, you're from HubPay. You're the first fintech to launch digital wallet in UAE. And what exactly do you think about the digital wallets here? And I think this is quite new in the precious metal space. How is the adoption? How is the challenge? And have you explored this in the other markets? What would you like to say about the digital wallets in the precious metal space?
Yeah, thank you, Professor, for the question. There's two components there. There is the digital wallet component, and then there is the component on tokenization, which Matt just so accurately summarized. On the digital wallet space, yeah, it's relatively new in this market. You have the regulatory framework came out only a few years ago. HubPay was the first digital wallet to get licensed out of ADGM. We're the only one at the moment doing both retail and corporate. In other markets, we've seen the digital wallets be enormously successful. Paytm in India, Alipay in China, and really completely change the kind of the financial inclusion game and the entire financial markets at its core. And that's the opportunity that represents us now. So the digital wallet really is the kind of landscape. It's the platform around there. And then it's about what kind of products we're going to put on there. We started with payments because it was an easy one to do, and it was solving the easiest problem in the market. But to your point on gold and tokenization, next week we're integrating with a cryptocurrency business. Putting on something like Control Alt's business on gold tokenization would be just as easy. At its heart, we've got our own core wallet platform, all hosted on the AWS. Our APIs, I imagine, could integrate with Matt's pretty quickly in a matter of days, if not a week. And so therefore, you're able to open up a whole new route to market to allow users to trade gold, to hold gold tokens. So the digital wallet really is one of the kind of routes to market. And one of the most useful and exciting products is gold tokenization on it.
Thank you. Thanks, Kevin. I have listened to all the inputs from all of you. Certain things I would like to ask you. See, when we are talking about this gold sector all over the world, there is a lot of consolidation of the industry is not happening. We see about when you look at the supply chain right from the ores, refinery, to the traders, to the jewelers, to the market, a lot of different stakeholders come in the picture. And all these stakeholders, when you look at them, they are big players, small players. How do you bring them all into one platform? And gold being the global asset, we also have lots of involvement with the country, with the government, with the policy adoption of the government. And in this, as we understand, the role of technology is to not only to increase traceability, transparency, there is a value proposition associated with this. And this comes at a price, as some of you have mentioned. This comes at a cost. Is there a willingness to spend that cost? Is there a willingness to spend that cost? What value proposition that one can achieve? And unless otherwise the sector comes together on a single platform, the benefit is not going to be shared by everyone. It's not like, one player signs up for it and you are going to see the benefit or the not benefit. It's not going to happen. So there are quite a number of challenges here, quite a number of challenges, and pricing part, policy part, cultural aspects, all these things are all there. If I have to ask you, maybe in 2 minutes, each of you can take it. What exactly are the challenges, and which are some of the technologies, or which are some of the processes that are going to stay forever now, which are going to be there? Something which the sector cannot ignore. For example, if you think blockchain is something that cannot ignore, and it could be anything. I don't want to throw words or throw some thoughts into you. What do you think is going to stay? What is going to be, going to sustain? And it can give a kind of a macro or a magnum shift to the industry. And this you could say from a country perspective, or from individual sector perspective, or in your own dimension. I would like to listen from each one of you. You may please take your lead anyway. Which is going to stay?
We can go.
And what are the challenges in this?
A more logical approach. I think, first of all, it's very important that we understand that we talk about so many technologies, and there is, at least not as far as I know, there is no single body that focuses purely on technology, not in this industry and not in many other industries. And I believe that is lacking. The mapping out of what different technologies can do, how they can be aggregated, how they can support each other, how they elevate each other, there is still a tremendous amount of work that needs to be done, but that can actually be done very easily. We just don't have, we have a very fragmented environment where we talk a little bit about technology in the different councils, in the different conferences and things like that, but we don't have a body that truly focuses on the technology and creating the layers of interoperability between the technologies. Because the one thing I do not wish to this industry is that one technology dominates it at the end of the day and is a one-fits-all, because these never work, never will work. They are a product of compromise that at the end of the day serve neither one side of the spectrum nor the other. So the only answer to that is integration and consolidation, or interoperability of the various layers, but by establishing, I would call it, minimum viable levels of security and traceability that need to be found across the supply chain.
As I said, innovation or technology cannot be for a purpose of vanity alone, right? What purpose does it serve, you know? Again, throwing up to everyone.
I just go back on the earlier question, right? So technology interoperability is something that was mentioned over and over again. And interoperability is built on specification. Specification, if it is country to country, government to government, organization to organization, they have to come to a consensus. What is the specification of transactions between these entities? Once you define that, there are a lot of technologies, a lot of players who can build technology against those specifications. So that should be open for everybody to compete on. You should not count on technology. You should we should consolidate on specification and build technology against those specifications. Second thing is a technology that we can ignore. Of course, we always hear about AI, right? So now we have all this data that exists there. We talk about traceability, we talk about AML. All this information exists there. I think AI can solve a lot of these problems without building, standard the programmings that we do currently. There is a lot of models that can help us in AML as well as traceability. This is something that you will not be able to include in the next 10 years. The entire the landscape is going to change, right? When AI comes into play. That we are talking about agents that is going to roam around on the cyberspace, figuring all these things out on our behalf. So I think AI would be something that we can't ignore in the coming future.
Thank you.
Yeah. See, from my side, let's try and understand what technology is currently being used. So if you come to think of it, if you look at gold traders, refiners, miners, consumers, retail operators, you're having a screening software, so that's a tool. You're having an ERP solution. You're having a accounting software, and these are not talking to each other. So let's look at what technology currently prevails in this market. What we need is bespoke solutions. We need tailored solutions, mind to market. You talked about there are various actors in this whole value chain, and we need to build from somewhere. Either we go back from the refinery all the way to the mine, then look at from the refinery to the consumer. So if we are able to build this value chain, we need to plug in a technology solution which actually puts in everything. Now, what are the challenges this technology will resolve? As Hans mentioned about counterfeiting of gold, right? So do we have a solution for, let's say, digital fingerprints of gold, to overcome the challenge of counterfeiting? Let's look at the AML risk. So what are the kind of challenges we are facing and how it will help us, as I said, to drive our business? So the KYCs that we are doing, how many people, a trader, a refiner, can they actually throw in resources, 10 people, 20 people, 30 people to do the work? Let's enable that to do enhanced due diligence by picking up data points. So if we look at, we talked about tokenization again. So digital gold, that's the future. We are looking at this. We are looking at tokenization. We are looking at people buying digital gold. How do we embed it into that retail sector? You know, what Malabar is doing, I mean, these number of stores that you have, the retail, the footfall in your stores is massive, right? So how do we get that data? And it's very important that we are lacking data. You know, the step one should be to have your data to start with, and then to build from there. And it should not be just left to the software teams or IT teams. You need active involvement of the stakeholders, so the businesses, the compliances, you know, the other parties, so that people who are actually running the business understand what will benefit out of this technology.
So I think coming to your question on what technology do we think is here to stay, I think I might be biased, but I am obviously a big believer in blockchain technology, and I think it's quite evident in the fact that, you know, well, we talk to some of the biggest financial institutions, the biggest banks in the world, and they're no longer talking about pilot schemes or testing the technology. They're talking about full-scale integrations and how does this actually improve my bottom line? How does this actually save us costs and drive revenue? I think there's been a few challenges when it comes to adoption of blockchain technology, and specifically in our case, tokenization. I think one of the big ones is regulation. The technology is actually very easy for people to use, and that's by design. Blockchain is meant to make things easier, so it does help. The challenge is how you marry that with a regulated environment, how you marry that with you know, financial services, which is, again, heavily regulated. So that has been a big challenge. It's also, I think, what is so interesting about the UAE, you know, having a separate regulator, VARA, come in to help regulate digital assets is super progressive, and that's why businesses like ours are coming to this region. So we are now starting to see, you know, regulators or new regulators come to try and help with this problem. And I think the final piece has been adoption. I think once you achieve critical mass with a piece of technology, then it becomes integral, and then it becomes something that everyone uses. We are not quite there yet with tokenization, with blockchain technology, but soon, you know, what we expect is for wallets to become mainstream. Everyone has a wallet. And so when these pieces of technology are all integrated into the fabric of our lives and it becomes mainstream, you know, then all of those barriers will fall away. We are on the path to getting there, but we are not quite at that point of the adoption curve yet, in our view.
You know, what you're saying is, you know, is very close to or very relatable with us. You know, me coming from India, you know, I can relate to you saying that, you know, technology is easier to use. You know, it makes your life easy. It makes processes easy. It makes debugging or any kind of error just gets thrown up. It's all easier. I understand this very well. And, you know, Kevin was saying about, you know, in India, suddenly this Paytm and all these, you know, digital payments has gone in a big boom way. Even in rural India, where people don't have much of a education or any kind of awareness, they use, you know, digital wallet just like anything. But can we say that about this particular sector, the stakes are very high? Transparency, you know, traceability is something that what we think of as virtues, and which we know really very well they are virtues, there is a little bit of an apprehension, yeah? There's a little bit of apprehension. There's a little bit of guardedness about, you know, how much I want to be traced. There's a little bit of guardedness about how much I want to be, you know, knowing about the businesses. So the stakes are very high. The margins, it depends. If you're a large player, your margins are manageable. If you're a small player, there is always this margin game. So how much one is willing to do that? I thought this, perhaps more than a mindset, you know, we keep pondering, we keep researching about this. To me, this is not just a plain mindset issue about adopting to technology. This is also about, you know, how much I want to be exposed, you know. So is there an element to that, or, you know, am I purely academic in that part? Again, I think let Kevin finish this, and then let us revisit this. Sorry, I'm so curious to not to ask this question to you, all of you.
Well, there's two questions there, Professor. There was the which technology will endure, and then is there some resistance around identity or kind of opening up your own kind of information to prove that kind of identity. So look, on your first point of what technology will endure, I think there's three factors that drive it. I think first of all is is the proclivity of data, right? You talked about emerging markets and you spoke about India. The cost of data is coming down, but we still have got a lot of emerging markets where that still needs to drop further. The Starlink satellites by Elon Musk, et cetera, seem to be driving that in one direction. That's critical, and that's critical to have that kind of globally. The second factor is going to be identity. So let's bring it back to the question you just asked. Having an ability to onboard en masse and at a low cost is critical, and that's, we've seen some enormous success with the schemes in India, like Aadhaar, similarly in Pakistan. In places in some of the countries and some of the gold producers in Africa, whether it's the identity of the individual or the identity of the gold, that is going to be more challenging. But there's certainly some kind of leaps and bounds. That's your kind of second component. And then the third component is then linking that up with a kind of end resource. So Matt talked about the tokenization of gold. The kind of products, the technology that's going to endure on the product side are the ones going to add the most value. And I think what's interesting in these kind of markets here is tokenization of gold is certainly interesting to retail investors and owners across developed markets. But in emerging markets, I think it's far more appealing because gold is inherently got a more cultural significance in a lot of different kind of nations. But also, if you look at one of the few assets they know and trust, to reference the previous speaker, Bitcoin's been around for 10 years, but gold's endured for 10,000. And so the ability to have a product there that everybody understands the world over, and now they can own a bit of that in digital wallet, that's something that can hold a store of value and a store of trust long term. So then that's the kind of the ability there for Matt and the other kind of guys to be able to tokenize that and bring it onto platforms like HubPay and others. They're the technologies that endure.
Thank you. Thank you very much, Kevin. Anybody else has got it? Yes, Faisal.
Just to add to your question about, is the market worried, or will the market be worried about disclosing the identity or disclosing the traceability or the tracking of the gold? So I would say that if you've done your identity checks, your due diligence on your counterparties correctly, there's nothing to hide. And if you are responsibly sourcing gold, then you can very well show the traceability. So, you have to embed, we can talk about technology, we can talk about data, but actually if you're doing responsible sourcing, then I'm more than happy to actually disclose, we are sourcing from a particular country, it's legit source, we've done our, due diligence, we've got responsible sourcing guidelines met. So I think the market would not be afraid of doing that. And we are seeing that emerging trend, particularly in the last 12 to 18 months, with several initiatives by the Ministry of Economy, or here, particularly in the UAE, with TMCC, where refiners are required to follow responsible sourcing guidelines. There is a decree which has been, Decree 68, for traders to actually implement some of these requirements. I think there is a need to have a registry at a country level where you're able to actually trace. If we are talking about traceability, a registry which is able to trace the supply of gold and track that.
I think I would like to add to what you were saying. I think building traceability does not mean that we are exposing our business competitiveness, right? So there should be checks and balances that needs to be brought in to make sure that the information that we expose to larger public is restricted, but there is a traceability to the product that's sourced from the mining to the retailer. That's very important. And the other question that we talked about is whether will the consumer pay for this extra cost, right? Yeah. During lunch, I was talking to someone that they're trying to sell green gold, right? Will customer buy that cost, give that additional cost for the green gold? I think if you see the customer segment of Gen Z, they are very aware of ESG, right? They responsibly source, they want to live responsibly in this world, right? So now you see them paying an additional cost for carrying a recycled bag, right? So I think there is an opportunity for us. I think as a society, as we get educated about the implications of the things that we do in this world, I think the impact of what we bring in this world, I think there is, as we bring in this education, I think society will change as a whole to pay that cost.
I'm glad that you say this, it kind of gives the regulation is not just an overhead, but ESG is something that one has to, sign up for.
Yes.
Thanks.
I just want to echo this, but also to add to it that the cost of traceability is often, to a large extent, just offset by efficiency in the processes, so we cannot forget that. But I do agree that we are heading towards a generation that is willing to pay for responsibly sourced materials. We have seen it in the jewelry industry. As I said, we had discussions last week during the Diamond Conference. That requirement of traceability to the mine is simply a must today. It's no longer an option. And to try to hide behind a cachet or saying that there is data, everybody I think on this panel knows how to anonymize data if you have to. I do not believe that anybody in this room that trades or any consumer today, or particularly manufacturers of jewelries, are willing to accept the reputational risks that comes associated with a material, being it gold, platinum, or diamonds, or precious stones, where you do not no longer or where you do not understand the provenance. These times are over.
Thank you.
And
Thank you.
just to jump onto that point real quickly, it's the same, kind of to Faisal's point about, some people have been struggling on the kind of compliance side. A lot of the financial institutions will not work on precious metals because they found it really hard. No, it's not. Just develop a new framework, develop a technology process, an operational process to onboard companies. We did it in 3 months. We set out the framework to international global partners, some of which were reticent to get involved in precious metals in the Middle East. When we showed them our framework and the businesses that were operating in this market, they were more than happy to work with them. And so now we're transacting payments seamlessly through the UAE into Africa. And it's a good example of sometimes you just need a slightly more innovative approach around defining a new framework.
Thank you. Thanks, Kevin. So, drawing from, everything else, you all said this, what I would like to say as taking away remark is innovation, technology, deep tech, or something which not only improvises the system in terms of transparency, and good measures, good performance, plus also enhances your reputation in the sector. So be it any entity in the sector, small or big players, this is something to stay and this is something to improve your reputation in the sector. So that's what I would like to take back from this panel. Thanks very much for such a wonderful, wonderful speakers, and I gained a lot from each one of you. Thank you very much for this. I believe that the audience over here enjoyed this panel as much as I did and learned as much as I did. Thank you very much for being a wonderful audience.
Thank you.
Thank you.
We are not on time. We did well. We are not on time. Thank you.
Great, thank you very much indeed. Our final panel for the day. Let's wrap now. Some closing remarks from Mohammed Karam, Head of Business Development, Precious Metals and Stones at DMCC. Mohammed.
Ladies and gentlemen, Your Excellencies, assembled guests and colleagues, Assalamu alaikum wa rahmatullahi wa barakatuh. A very good afternoon to all of you. As we are about drawing today's events to close, I would like to share some reflections and words of thanks to our all speakers, our all guests who was part of successing this event. this phenomenal event, to be honest, if I said, if I picked the correct words, to have 800 guests discussing and working toward one goal, it's not an easy thing to do. And I agree with Hans that we are lucky to have Ahmed bin Sulayem. Always the valuable things is rare, so I think it's only one Ahmed bin Sulayem. And we are lucky to having him in DMCC. From the attendance and the discussions, I can confidently say this is the best ever precious metal conference have been done in the DMCC. We have heard from our speakers, the world-class speakers, about BRICS and how BRICS reshaping the trade of precious metal. And we got the insights on the future insights about the direction of the precious metal. When we are talking about BRICS, it's not only about BRICS as a title, it's about the concept of BRICS. When we're having like an agreement, ensuring the win-win strategy, that definitely will work. This is how the things should be done in any sector, not in precious metal sector only. When we are talking about the jump, the huge jump, the 36% of the gold trade in UAE, it's not happening sudden. It's kind of harvesting the efforts, the whole sector efforts. It's mean we are talking about trade, government, the transparency, whatever it is, call it. If we just putting in one bundle, this is the harvesting. That's why UAE positioned the second largest gold hub in the world. We heard from our speakers about the technology, about the importance of overcoming the conflicts, and about how the technology are driving the revolution in the precious metal sector. We heard about the blockchain, how it's ensuring the traceability by efficient way, not by just having the documentation, the old way. When it's become take it from the theoretical part to the practical part, this is the most important thing. In any sector, again, it's not only about the precious metal sector. We have the same cases can be discussed in Dubai. We discussed it in Dubai Diamond Conference as well about the traceability. Ladies and gentlemen, whatever happened as an ecosystem for precious metal, and DMCC couldn't be done without you. So therefore, I would like to say again, thanks for our speakers. Thanks for our chairman, Ahmed bin Sulayem. Thanks to His Excellency Abdullah bin Tawq al-Marri, the UAE Ministry of Economy. For Jordan Belfort, the real wolf of Wall Street. For me, as a person, I got a lesson that whatever you want to do, do it, but do it by wisdom. Do it as fast as you can, but don't end up yourself in jail. This is the main thing. Thanks to our 37 sponsors, to my colleagues, amazing job have been done this week. Amazing job done by marketing team. So this is the part I believe Samar will like it, but they deserve it. They deserve it. And of course, to all of you, our valuable guests and participants. Ladies and gentlemen, for next year DPMC, our teams are already identifying the most suitable time So please stay tuned for more details. In the meantime, I look forward to seeing you all again later this evening in DPMC Gala Dinner, where we will be announcing the winner of our gold bar competition. I personally know someone in this hall won a gold bar, but he didn't get it in his pocket. Hello, Samar. Again. So along the side, we will have the award ceremony and some fantastic live entertainment. So kindly join and enjoy the evening. Thank you.